Hello, welcome to another webinar of Winalyze. My name is Roger. I'm the Chief Operating Officer and co-founder of Winalyze. And today, thanks to some of you who voted on our survey on LinkedIn, we're going to talk about InsurTech versus traditional insurance. We're going to compare both sides of the insurance industry, and we're going to assess how both are approaching a more innovative world. In order to address this topic, we're going to touch 5 points. The first one is introduction to InsurTech, understanding what it is. Also, why VCs, venture capitals, investors are putting their money on InsurTech. Who are the global InsurTechs and why? What are the advantages and disadvantages when we compare InsurTech and traditional insurance? And we will finish this presentation, this webinar, talking about traditional underwriting versus InsurTech underwriting. The reason why we've chosen this fifth point is because that is the area of expertise for us, for we know. So let's begin. What we see is that InsurTech as a word is the combination of insurance and technology. I've seen it written in 1,000 ways. I think the way I personally like more is InsurTech with a capital I and a capital T. No InsurTech or anything like that. Insure and tech. And it comes from traditional insurance plus technology. That equals InsurTech. So what is the characteristics of InsurTech? The most common technologies that InsurTechs are using is artificial intelligence, especially applied to data and analytics. Blockchain when we transfer data in a secure way, and of course, big data in terms of having big data analysis or the analysis of vast amounts of data. At the end, we need to take into consideration that the insurance industry itself is an industry based on data. Everything they deal with is with data of their customers. So InsurTech is trying to bring the new technologies on the data analytics space to the traditional data management that insurance companies are doing and have been doing for the last century. So why is venture capital interest in investing in InsurTech? It's a very simple reason. The market size of the global insurance industry is 4.9 trillion US dollars in written premiums every year. So this is a big chunk of the financial market. And of course, anyone will be interested in entering a market of this size. So according to our friends of Astoria, BC, this is how the investment in InsurTech has been evolving during the years. So as you can see, only in the first months of 2021, there were already $3 billion more invested in InsurTechs than the previous year. And these figures keep rising, keep growing every year. In the end, I think all the investors will agree that this is an industry that is growing. This is an industry that can have a lot of innovation. There's a lot of space to innovate in the insurance industry. There's a lot of work to do, and that means there are a lot of startups that can survive and grow in this industry. So InsurTech means disruption. InsurTech is here to change the way we have been understanding insurance until today. These are the biggest global InsurTechs in the world. We have 6 InsurTechs we've chosen. So Oscar, Right Healthcare, Clover Health, Next Insurance, Unwell, and Hippo. 4 of these InsurTechs are health insurance companies, but they are digital. That's why they call it InsurTech and not a traditional insurance company. They're recently new. I think most of them are younger than 10 years, some of them even 5 years. And they sell health insurance, especially in the US. As you know, the US health insurance industry is very big, and that's why we can see the biggest InsurTechs in the world are located there and offering insurance, health insurance. Uh, I would like to highlight Next Insurance, which is a InsurTech platform that is selling insurance for small and medium enterprises, and Hippo that is selling home insurance. As we can see in the investment these InsurTechs have received, all of them are close to $1 billion. At the end, we need to understand that this very big amount of money is because these InsurTechs need to build, let's say, the infrastructure that a traditional insurance has in a record time while applying new technologies. So the challenge that in an InsurTech that is B2C is facing is very big because they need to serve a better product if they can. They need to serve a more friendly user experience while they need to offer the same quality or even better quality for that product than insurance companies that have been doing this for more than 100 years. So in order to tackle this challenge, they need big amounts of investment. So there are some advantages and some disadvantages on this InsurTech world. Beginning with the advantages, what we can see is that because these InsurTech companies have new technologies in terms of data analytics, they can be able to offer a product customization. So some of them are able to know those customers better. When you have new methods to analyze the data, you can find new insights about your customer, and therefore you can adapt that product in a more proper way to their needs. They're also dealing with real-time information, some of them. So most insurance companies, traditional insurance companies, have information about their customers that they collected when those customers acquired the policy. And after that, there's no update on that information. So let's say I got a health insurance 5 years ago and my health insurance company hasn't called me. So they don't know if I've broken my leg, they don't know if I started smoking, they don't know what has been happening in my life. They don't know how my risk has changed. And that applies to health, that applies to home, that applies to business insurance, that applies to many types of insurance. One of the advantages of InsurTechs here is that they have the ability to collect information of their customers in real time. And therefore, they can save time and money. Having more automated processes means that they can be more efficient in terms of economics, and therefore they can be more competitive in the market space. So we see that the more tailored a product is, the more tailored the price for that insurance they can offer. And of course, we have to take into consideration as well sustainability. So we're seeing now how all the insurance industry is moving to sustainability. In my opinion, it's not really clear yet what insurance companies can do for a more sustainable world. On one side, of course, they can go digital, so stop using paper and these kind of things. But I don't see that. I see very clear why a car company can be more sustainable, but I don't see what can an insurance company do. So, in my opinion, insurance companies are committed to sustainability, but they are still testing where can they add value to tackle climate change. So some of the disadvantages, because there are disadvantages for insurtechs. Licenses and regulations. So if we are a new insurtech and we have no idea about the regulation in the insurance world, which can be very vast and different depending on the regions, there is a problem. There's a problem that insurance companies already know how to do, that they've been doing that and dealing with that for hundreds of years, for decades, while insurtechs might be very optimistic about their business, and then they have to face these problems. They have to know if they can do what they want to do. They need to talk to many regulators. They need to get approvals. They need to do all this paperwork and legal work that takes a lot of time and a lot of money. Um, so in terms of innovation, sometimes insurance companies can be even faster, for example, to take out a new product than an InsurTech. We also have seen sometimes InsurTech companies are dealing with data, and some of them might not be very compliant with GDPR or data privacy issues. The more innovative you are, sometimes you can ignore some of these regulations, and we've seen InsurTechs that had to pivot or that had to go through a compliance process. So data privacy, while an insurance company know very clear, a traditional insurance company, how to deal with data privacy, sometimes InsurTechs don't have that clear idea of what they can or cannot do. So now going to the bit where we talk about what we can do at Winlice. We can compare traditional underwriting versus InsurTech underwriting. So underwriting is only one of the processes within an insurance company. But choosing this specific one, what we can see is that in traditional underwriting, sometimes it could take up to 20 minutes to do an underwriting process for a business. So what we see is that the data, most of the times that the traditional insurance company has about their clients is inaccurate and is outdated. It's the same reason I mentioned before. A few years ago, I got an insurance, but I haven't been in touch with my insurance company, but I don't know how my risk changed. So these processes, underwriting process, renewals process, process where you gather data about your customers, they're very manual and very slow. And we see that in most insurance companies, the main reason is because the workers don't have the tools or don't have the technology to automate and be faster in their processes. One of the reasons is because in order to do a little bit of innovation within an insurance corporation, there are a lot of compliance processes they need to go through. So a slight innovation, a slight change of their systems can take up to 2 years, while for an InsurTech, that is faster. So insurance companies end up making judgments on incomplete data or inaccurate data. They need to know whether they will accept, reject, or accept with modifications that risk. And therefore, the process relies highly on the human intuition or a human-based decision, which is not bad per se. But if we think that we could have an AI making those decisions in a more automated way and in a more accurate way, then maybe we should see that as something we should be doing. So if we choose an InsurTech, for example, Winlice, of course, we can reduce the time of the underwriting to 4 seconds. Why? Because instead of asking our customer to send us all the data that we need to assess the risk, we can go online and get it automatically from hundreds of data sources. So from the website of this business, from the property register for property insurance, from the commercial or government register for licenses, VAT number, also number of employees, addresses, number of shops, type of products they are offering. So all that information needed to complete the underwriting process, we can get that in seconds and with very updated information. So we apply that data, and what we do is we update the information that is incorrect. We verify the information that is correct. We enrich with information that the insurance company doesn't have today, as for example, understanding if this customer needs cybersecurity insurance because we identified that they have a new online shop. And because that data quality is improved and is higher, we can predict with more accuracy who of those customers are going to have a claim, make better pricing decisions, and in the long term, reduce the loss ratio levels, improve them, basically. So updating, verifying, enriching, and improving data by using online open data that has a high quality and analyzing it in an automated way. That is what we can do as InsurTech that works in underwriting. It's easy, fast, and accurate underwriting. So in sum, what InsurTechs are doing for the insurance industry is automating processes, making them more accurate, making them easier. So the experience is optimized for the insurance company, but also for the end customer. At the end, using new technologies is what can bring to this industry. Thank you very much. Don't forget to subscribe, to like this video, to share it, to promote it if you can and if you want. Of course, we're not obligating anyone. And please keep in touch. Follow us on LinkedIn. We will probably share more surveys so you can be able to choose what's the next topic and the next webinar about. Thank you very much and have a good day.